Airbnb is what we're talking about today, guys. Thanks for joining the channel. My name is Chris. We're going to go over a few things about Airbnb, like what do they do, where do they make their money, how many employees they have, how many countries they're in, all kinds of good stuff. Then we're going to get into some financials around them. Then we're going to compare them to some of their competitors and see what this company has going for them in the long run. So if you like content like this, please hit that spicy like button, hit the subscribe button, smash it, smash it, smash it, and let's get started. So what is Airbnb? So Airbnb is an online marketplace which lets people rent out their properties or spare rooms to guests. Airbnb takes 3% commission of every booking from hosts and between 6 to 12% from guests. So this is how Airbnb makes their money, of course. Airbnb has 5.6 million active listings worldwide. They also are located in over 100,000 cities, and they're in over 220 countries at the moment. Airbnb has over 800 million guest arrivals. Plus, they have over 4 million hosts on Airbnb. Airbnb's hosts have made over $110 billion as of October 2020. And the average annual return or earnings for their hosts is about $7,900. So when is Airbnb going to go public or IPO? It looks like from this article here that was dated November 19th, 2020, they're going to go public or IPO on December 2020. I heard it was going to be December 10th, 2020. If you guys know for a fact, please leave it in the comments down below. So let's get into the good stuff. We're going to go over through a bunch of numbers on Airbnb that you might want to know or might be interested in before you invest in this IPO, or maybe even you're thinking about investing into it later on down the road. Either way, we're going to go over them. We're going to see what kind of numbers they have. So it looks like they're going to IPO around a $35 billion market cap. And they had about $1.3 billion in revenue for Q3 2020. On this chart here, you can see since 2016, their guests and users have only gone up. And they're probably expected to keep going up. Airbnb is a very popular website to get on, to get, beautiful homes out in the middle of nowhere, to just take your family and relax. And they're really good for groups of people to get together and do events and all kinds of different things. My opinion, this is going to continue to go up. The users are going to continue to flood into this company, and people end up loving this company compared to a lot of the alternatives that you can pick from. So Airbnb had a gross profit in Q3 of about $1.1 billion. Their net income was about $219.3 million. Airbnb's cash was about $2.7 billion as of September 30th, 2020. And one of the most impressive numbers here is their gross profit margin for Q3 2020. It was an 83.1% gross profit margin. That's a huge gross profit margin for a company like this. And as you can see here, from 2017 till 2019, their revenues have continued to increase here. So in 2017, they had about a $2.5 billion revenue, and now they have about $4.8 billion revenue, almost a double up in just 3 years. So that's pretty impressive for a company like this, and it really stands out to investors that are looking to get into like a lot of growth stocks. Airbnb does raise a lot of capital, but this brings in the assumption that a lot of people are willing to invest in this company. Just their last capital raised $1 billion. So here we have a really cool chart to look at. We get to see kind of where the revenue comes in, and honestly this kind of surprised me, and it probably shouldn't have. Most of their revenue comes from international sales. So a lot of this company is actually based outside the US, and that's where majority, 63.2% of their revenue actually comes from. Only 36.8% of their revenue come from the United States in 2019. So very impressive to me. This tells me that they're not just localized in the US, they can really expand their business and get outside the US and not rely on the US market so much. So as we take a look at their income statement here, of course their revenue is almost doubled in the last 3 years. But if you take a look at their revenue growth, this is what kind of concerns me with this company, because back in 2017, they had revenue growth of 71%, and in 2019, it was only a 32%, which is still a massive number for revenue growth. But the revenue growth has been declining year over year rapidly. If you take a look over here at their quarterly income statement, the revenue for Q2 2018 was about $903 million, where their Q2 for 2020 was only $334.8 million. So this brings in the question of the Rona, because obviously this is why this number is so low for Q2 2020. If this Rona keeps continuing to hurt the markets, it's really going to put an impact on companies just like this. I know my girlfriend was trying to get an Airbnb. She gets every year for her and her friends for a Christmas get together, and they said we're not going to do it this year because the Rona's, it's too dangerous, and she had to actually go and get another Airbnb somewhere else that was a little bit more expensive. So this can hurt Airbnb's profits and can hurt their revenue. But as of Q3 2020, it looks like they've picked their business back up, and it looks like they're going to get back on track, and hopefully they'll end this year on a good note. Staying on the income statement, it does look like their gross margin has increased or stayed about the same for the last 3 years, from 2017 to 2019. It was about a 75%, 76%, 75%. So that's really good to see. And as you can come over here and see their quarterly, in 2019, they had about a 67, 74, 81, 67, 52. And now, of course, Q3 had the 83% gross margin profit, and that's a really good number. All of these numbers across the board are really good numbers. A lot of companies struggle to get into the 30s, and this company's in the 75 to 85% gross margin profits. Their R&D expenses have been going up dramatically. They've over doubled in the last 3 years, but that's nothing to be too concerned about, because a lot of this probably has to do with research and development on how to expand their business online and how to reach more customers, and probably a lot of marketing in there as well. And as you can see here on their bottom line, their net income, they have lost money consecutively year over year, and I don't think this year is going to be any different. But this gives you the buying opportunity, because this company could change like operating expense total here, and it's doubled over the last 3 years. If they could bring this down just $500 million, they could become profitable like that overnight. And this number here is kind of concerning to me, but overall, it's a growth company, so I expect them to spend a lot of money on marketing, a lot of money on their tech. We should see this company start turning around next year or in 2022 and start bringing in big profits. Now, looking at their balance sheet, they have about $2.7 billion on their balance sheet in cash. They have about $7.2 billion in current assets. They have a short-term debt of $62.7 million, and they have current liabilities of $459.8 million, which they have come off of since last year, because their current liabilities last year were about $5.2 billion. So to go from $5.2 billion to $459 million, that's a pretty good dramatic drop in current liabilities. What does concern me on this though is their long-term debt and their total debt. They have about $2.3 billion in total debt. That's almost as much as they have in cash. And that is something that you don't really like to see. Even with a growth company, you want to see, a good healthy balance sheet where they could pay their debt off at least twice. But I understand with this company going through the Rona and having to deal with all that put a big toll on this company, and we're hoping to see this cash balance go up, or this debt at least get paid off a little more. And with their cash flow, they've consecutively lost money year over year, quarter over quarter. They keep losing money. There was a little small portion of 2019 and into early 2020, I believe, that they made a little bit of a profit. But overall, this company loses anywhere from 70 million to 600, 700 million. And I mean, that's a pretty big gap quarter over quarter. But like I said before, they're probably spending a lot of this on research and development, investing it into getting their business expanded, letting more people know about the Airbnb, and having more customers come in. Now that we're through with the numbers, I want to show you guys some of their competitors that they're looking up against, and also just comparing these two companies so we can get a gist of where Airbnb can be in the future. So Airbnb, we're gonna compare them to the Booking Holdings here, because this is the most expensive and one of the best compared to Airbnb. Funding date over here, they had 2008 for Airbnb and 1997 for Booking Holdings. This is a public company, so you can already trade Booking Holdings, and Airbnb's obviously private right now. They're about to IPO in December, maybe December 10th is what we're thinking. They do about the same thing. You know, they have a similar business model overall. Airbnb is located in a lot more places than Booking Holdings. So Airbnb's already overreached what Booking Holdings has reached. Airbnb has about a fifth of what Booking Holdings has in employees. Their valuation is about $35 billion compared to Booking Holdings $86.1 billion. They have 700,000 Twitter followers, where Booking Holdings only has 10,000 Twitter followers, which I know a lot of the youth is on Twitter, so this is good exposure for Airbnb to have that many followers on Twitter. And they obviously tweet a lot more than Booking Holdings. They're a lot more modern. The employee rating for each of these companies, Airbnb actually beats Booking Holdings. Airbnb gets a 4.1, where Booking Holdings has a 3.9. And the revenue comparison, Booking Holdings made $15.1 billion in 2019. Where Airbnb only made $4.8 billion. But Booking Holdings has been around a lot longer than Airbnb, so that's something to keep in your mind. And of course, Airbnb lost over $670 million last year, where Booking Holdings made $4.9 billion in 2019 alone. So this, for me, tells me that Airbnb can be so much larger than this other company here, that they can make so many more profits than this company right here. They're expanded more, they're well known, they're you know, a lot of people probably know Airbnb, and if you go and ask everybody that knows Airbnb if they know about Booking Holdings, a lot of them are going to tell you no. I'm not saying everybody would, but a lot of them will probably tell you, no, I know Airbnb, that's what I use. I don't use Booking Holdings. What's that, you know? Well, guys, we went over Airbnb. I hope you guys enjoyed that information. I hope it helps you decide if you want to invest in this company on IPO, what this company has going for them. We figured out, you know, they pretty much lose money consecutively year over year, but with the very few different things they could do, they could become profitable pretty quick. So if you guys like this content, hit that spicy like button, hit the subscribe button. My name is Chris. That's all for today. Peace out.